Okay, so let's make a full breakdown of the situation that we currently have on BTC USD. Now, start here from the monthly time frame. What we can see is that the market has been impulsing to the upside extremely aggressively, and we can see how yesterday the market has actually provided new all-time highs. So here in the monthly, there is absolutely no structure in this massive impulse to the upside. And the last structure that we can see here from a monthly perspective dates back to this area here. In fact, at this level, what we had was a very strong area of resistance here, again resistance here, and again resistance here, which after the market broke it to the upside with this impulse was turned support because as you know, in the market, previous resistance, once it is broken to the upside, is turned support. And from here, we definitely did expect the market to create this move to the upside. In fact, I had created a full breakdown of BTC USD when the market was at this level, explaining all the reasons for which we expected the market to provide this move to the upside. And in fact, that is exactly what the market did. And by the way, I will link this previous analysis in description so you can go and check it out for further reference and more free education. Now, since here on the monthly there has been no structure created, let's go down on the weekly and see what kind of structure we have here from a weekly perspective. Now, here on the weekly, we can see how the market has created a nice impulse, correction, and impulse pattern to the upside. And lately, with the last a weekly candle that we have actually completed once again another impulse correction and impulse pattern to the upside, creating new all-time highs. Now, generally speaking, after impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market created a perfect 50% Fibonacci retracement, after which we did expect the market to create a continuation to the upside. In fact, that is exactly what the market did. Going down on the daily time frame, what do we have? Now, here on the daily, I actually had spoken about BTC USD quite a few times in the past. In fact, I spoke about BTC USD after this M pattern from here. I made a full breakdown explaining all the reasons for which, from this level, we expected the market to provide this move to the upside. And in fact, that is exactly what the market did. Then we had the creation of this M pattern, and from here, I made another breakdown explaining all the reasons for which, from this level, we expected the market to provide this move to the upside. And again, that is exactly what the market did. Then, after this impulse and correction from here, I made another breakdown explaining all the reasons for which, from this level, we expected the market to provide this move to the upside. And again, that is exactly what the market did. Then from here, I made a full breakdown explaining all the reasons for which we expected the market to provide this move to the upside. And once again, that is exactly what the market did. And we also had the creation of this M pattern, after which I explained all the reasons for which we wanted to see a move to the upside. And again, that is exactly what the market did. And by the way, I will link all this previous analysis in description so you can go and check it out for further reference and more free education. I will link everything below. Now, at the moment, what do we have and how we can be looking for the next opportunity on BTC USD? Now, in the very last breakdown that I made on it, we had this impulse, and I explained all the reasons for which, if the market would have provided a retracement, we could then be looking for the continuation to the upside. However, the retracement was very small. We didn't have a deep correction. We just had one retracement candle, and then the market broke back above. And this is great because it means that now we have new structure at this level. In fact, in all this impulse to the upside, there is one candle not related to the move, which is exactly this red candle here, which is a very strong demand area that, if the market will actually go and retrace to it, we can expect the market to reject to the upside. So what we will be doing with students. Now, if the market will retrace inside of this demand, then inside of here, what we will be doing with students is monitoring price action from a 4-hour perspective. Now, why 4 hours? Because monthly, weekly, and daily, those are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours.